It's Money Monday, and joining us now to talk finance today and investments is Managing Director of DLG Wealth Management, Andy Guzzetti. Thank you so much, Andy, for joining us this morning again.
Good morning, Stephanie.
Last week we were talking about heading into the new year and making sure your portfolio and investments are balanced, because over the course of a year, a lot of things can change. Today we're talking fixed income investments 101, kind of the basics that people need to know.
Right. The reason we're doing that, Stephanie, is that we're noticing that a lot of people are over allocated in bond portfolios. The reason being is people are very concerned with stocks, the volatility of stocks, so they move money out of stock funds into bond funds. As we said last week, if you're over allocated, you may create a problem later on. Let me show you why when it comes to fixed income.
Okay.
This is how bonds are priced if you own a bond. Let's say today I invested in a 10-year Treasury bond that's paying 2%, and I invest $10,000.
Okay.
3 years from now, I want to sell that bond. Now, the bond is now a 7-year bond because I've used up 3 years, but still paying 2%. At the time I want to sell that, people will look at the current interest rate environment, and let's say that interest rate environment, a 7-year bond, is paying 4%. Well, think about it. If yours is paying 2, 3 years from now they're paying 4, do they want your bond? The answer is no. So the concept here is if interest rates go up, the value of your bonds you're holding go down. Vice versa, if you went 3 years from now selling your Treasury that you own and it's 1.5% versus your 2, people will want your bond and the value of your bond goes up. That's in mutual funds, individual bonds, but again, think about it. If you're extremely over allocated in your bond portfolio when it comes to reallocation, okay, you run the risk if interest rates go up, and think about it, with the federal government keeping interest rates low, the probability of interest rates going up is very great. So you run a risk of interest rates going up and your portfolio value going down.
So the idea here that people really need to know is know what percentage, number one, you're getting back on your bonds, if that's where a lot of your money is invested, so that you kind of know how much supply and demand is out there.
No, absolutely. But again, it's not really just exact price. It's where interest rates are going. If interest rates go up, the value of the bonds or the mutual funds you own in fixed income will go down in value and will cause your portfolio to go down, especially if you're over allocated in fixed income, which we're seeing right now.
And a lot of people, like you just said, you are seeing a lot of that right now. Is it because people are scared out of the stock markets and they want something that's a little bit safer?
But that's what people perceive. The stock market has been volatile, can't take those big hits. But again, we're not saying sell all your bonds, put it all in stocks. We're just saying reallocate, get it to your asset allocation that you want, 25, 25, 25, whatever you've chosen, but make sure you take a look at your fixed income portion of your portfolio.
All right, Andy. Well, thank you so much. We really appreciate it. And of course, heading into the new year, it really is important to sit down, look at all of your investments, what they've changed over the past year, and kind of weigh your options and what you want to move ahead into 2012.
Very important, Stephanie.
All right, Andy, thank you so much for being with us this morning. Now, if you have any money questions, which we all do, of course, you can send us an email or post your question on our Facebook page. You can find us at Fox 23 News in the morning, and maybe your question will be answered right here on Money Monday next week. Well, up next, we'll take a last look at this morning's headlines.
And we got a full check of the weather before you head out the door. No problems any of the regional airports right now. High pressure in control.